Good afternoon and welcome to the CNBC-TV18 Mumbai studio. I'm Pavitra Parekh. With me is Sonal Bhutra. You're tuned into MF Corner, and today we're going to talk about something which is really interesting. The entire asset management space is getting hotter as the day goes by, and we have mutual fund investing picking up in a big way, right, in India. And with that, we've seen that there have been a whole slew of new AMCs that have entered the market. So the new entrants include everything from BlackRock, which is looking at a second innings in the Indian market in a partnership with Jio, of course, to the much newer, much younger Zerodha. Now, while all of this indicates the strength and potential in the Indian mutual fund space and will probably contribute as well to expanding the market, from an investor standpoint, this can make it harder to pick a fund and to pick a fund house as well. So how do you study a new asset management company? How much is it about the brand value, about the reputation of the fund manager? And when do you pick new over old? Sonal, let's find out.
Because that's something every investor must be wondering what to do with the new that has come by. So let's actually do one thing. Let's welcome the guest for the day. Let's get in Mr. Kushal Bhagi, who's the owner at PCC Investing. Kushal, good afternoon. Thank you so much for joining us. And as Pavitra was mentioning, there are so many new entrants when you look at the AMC industry. When does it make sense to look at these over existing fund houses?
Thank you to you both, and good afternoon to all your viewers as well. So, as far as active schemes are concerned, I think track record must count for something, right? So unless the new AMCs are offering a different strategy, a different style, a different approach, which plugs a gap in an investor's portfolio, I'd say the waiting time for these schemes to enter your portfolio should be a little longer than existing AMCs, at least for existing investors. If you're a first-time investor or a new investor and you're using the passive route to invest, then the edge that existing AMCs have might be a little lesser over the newer AMCs.
Okay, but Kushal, look at this. There are 8-10 new AMCs. How do you go about studying these? Are there some factors that, you can just put all of these AMCs through a test and try to figure if it makes sense?
So I'll say look at three things to consider. Okay. And the first point and the starting point should always be understanding your own existing investments. Okay. What schemes do you currently have? What schemes do you want? Do you have a vision of what your model portfolio should look like? And once you've identified that, then you can look at plugging the gaps with different funds, with different ideas in terms of, moving from your current state to your desired state. So always before you buy anything, I think the first step is to look inward, and then we can look outward. Now, when you're looking outward in new AMCs, especially, what should you consider? So the first thing that comes to mind would probably be the fund manager pedigree. Does the fund management team have a good track record? Have you invested with them before? Have you had a good experience with them historically? That may appeal to a lot of people. Secondly, are they offering something which is really differentiated, which you don't have in your portfolio? I'll take a minute to just talk about an AMC that has captured the attention of many investors over the last few years, which is Quant AMC. When they came into the industry in 2018, that's when Quant Capital bought Escorts AMC. And at that time, they had an asset base of maybe around 200 crores. But they said, we will come and we will do something which is very different. Now, most mutual fund schemes follow a buy and hold approach. What I mean by that is if you look at their portfolio 5 years ago and 5 years today, a bulk of the major names in their portfolio will pretty much be the same. And that's worked well for a number of schemes. But they said, we're going to come in and do something different. We have an investment process. We have an investment template where we are going to be active fund managers. We're going to search for opportunities and we're going to be cutthroat about it. So they're actually going to churn their portfolios. And if you look at their portfolio turnover ratio, it's in multiples over other schemes. Yeah. And they've backed that up with really strong performance across all the funds that they've launched. So 200 crores in 2019, it's around 40,000 crores today. So it is becoming a very hot and a very, very, very strong place for newer players to look at entering the Indian market.
So when one is looking at these new AMCs entering the market, how much is it about the brand? Because you pretty much have no data, right? And also, do you think this becomes more about picking a fund manager rather than an AMC that could lend some comfort if it is an old hand managing money, but it is at a new AMC?
Yeah, absolutely. Look, if you're an active fund manager and if you've built up a reputation over the years of delivering alpha, then certainly, your brand, your fund manager persona, they become your moats and investors will want to taste. Now, the expectation obviously is that if a fund manager has delivered substantially in his or her previous avatar, then, managing a PMS, for example, then obviously the expectation is going to be there that you're going to get a similar performance, a similar experience replicated at the mutual fund level. But one thing is for sure that this is a performance industry, performance-oriented industry rather. So, while reputations and brand will definitely play a role in drawing in the initial AUM, strong performance, good communication, good governance. These are the factors which will attract the larger AUM and an ongoing AUM.
Okay, that makes complete sense. And also, so many fund managers these days have that star appeal, right? Like you want this fund manager managing your money because he's got this proven track record. But Kushal, moving on, take us through some things that you consider maybe negative. I won't say negative, just something you should be cautious of when you're getting into a new AMC.
Good question. And I think just a little bit, right? It's not too much. I think the first thing is don't buy anything just because it's new. I think that is the main point. There is no urgency to buy anything immediately. You're not going to miss any bus if you don't invest in any scheme in its very early ages. And the second is, be a little careful about what fund you're investing in. Today there is one category, you can have one fund, right? That's the SEBI rule, except for sectoral and thematic, where you can have multiple launches from time to time. And I think that's something that investors need to be a little careful of. Because while thematics do have the potential of giving you the alpha, they also, you have to be very wary of when to get in and when to get out, right? So I think understand and ask questions of their products, see how it fits your portfolio. But, I think that being said, I don't consider any mutual fund to be a bad mutual fund. Everybody is past the regulatory requirements in terms of be it capital, infrastructure, personal and whatnot. Today, they all have skin in the game. People are investing 20% of their gross CTCs in the schemes that they manage. And there is some heavy investment that these mutual funds are putting in, and everybody wants to succeed. So just a little bit of cautious in terms of not being too fast to go and invest in a mutual fund scheme. Sit and understand where it fits into your requirements.
Okay, all right, take that point. So while we are talking about new entrants coming in, there are interesting tie-ups which have been happening as well, Kushal. Jio has tied up with BlackRock for the Indian market. What do you think of this partnership? And it is two big brands. Do you think they can actually shake up the industry or disrupt the industry in terms of taking away the market share?
Yeah, two huge brands, right? And I think you mentioned earlier that this is BlackRock's second innings in India. They've been there with DSP back in the day, and they've been there for almost over a decade. So I think it's only a matter of time before they came back into the Indian market. And now they're poised to come in partnership with Jio. And we know Jio, that every vertical they enter, they expect to shake it up and expect the MF space to be no different. Big investments, tech-enabled, low-cost products. That's their mantra. So it's going to be really interesting to see how it plays out. But more than looking at it as taking away existing market share from the existing players, I would say that they would contribute to increasing the size of the market. Today, your population is 140 crores plus. You've got nearly 13 crore demat accounts. You've got just 4 crore investors in mutual funds, and it's up from 3 in the recent past. So I think the question of the game is going to be, how do you grow that base from 4 to 10 to 15 to 50 going forward? And if they can play a part as far as that's concerned, it's only going to be good for the industry as a whole.
Oh, absolutely. And, even the existing fund houses that are there, the kinds of advertising that they're doing, or just trying to reach out to investors on every possible platform to spread awareness, it has already sort of made its impact felt in terms of what we're seeing with just the mutual fund investing picking up. So I'm sure that is going to happen. But Kushal, I have a lot more questions on some of these individual new fund houses, whether it's a Bajaj Fina, Zerodha. We'll come to all of that. But first up, we do need to take a short break. We'll be back in just 2 minutes to continue this conversation on how you should study an AMC and how you should really look at whether you should get into a new fund house, or stay with the old players. Stay tuned.
Welcome back. You're still tuned into MF Corner. We have with us Kushal Bhagi of PCC Investing. We're discussing everything about new AMC houses, how you can look at it, and what would the mode there be. Well, Kushal, we have discussed a lot about what factors one can look at, what could some of the drawbacks or factors to consider while investing in these AMCs be. But let's discuss it in detail and dig deeper. Bajaj Fina Mutual Fund, it has launched its initial few funds. This is a strong brand with a strong parent. How would you look at this AMC, or would you look at this AMC for investment purposes?
Look, Sonal, the stock has certainly delivered, right?
Yes.
Their fixed deposits are really sought after. So one really wants to look forward to what they have to offer in the mutual fund space. They started by leveraging their institutional relationships. So they've started off with a few debt funds. And that also sets the base for an STP that investors can do into their equity schemes. Now, when you talk about their equity schemes, they aren't going the passive route, they're going the active route. They've promised 2 funds, a flexi cap and a BAF, and they've promised a real differentiated offering in these 2 major categories. And, I think if you are looking at the actively managed mutual fund space, then flexi cap and BAF are actually 2 categories where the fund management expertise is really put to the test. Because in flexi cap, you can move across all caps. There's actually no limit as far as that's concerned. And in BAF, you're actually moving between asset allocation, primarily between equity and debt. So, the skill of an active fund manager will really be put to the test as far as these 2 funds are concerned. And definitely it's on the watch list, and one looks forward to what is the differentiation that they are coming in with these 2 funds.
Okay, that is Bajaj FinServ. But Kushal, this fund has decided to go the active route. There's one Zerodha which has decided to offer only passive products, right? I mean, I know this entire category is picking up. It's seen huge growth, but in India, there is still a clear preference for active. So your thoughts on this? Why should someone also pick a Zerodha fund over, an existing passive fund? The tracking error is not there, but, of course, these are very tightly regulated. You better not have a tracking error over a certain amount, right? Or SEBI is going to step in. So do you think that matters too much?
Look, when you talk about fintechs, right, I'm going to place Zerodha into that category. So let's talk a little bit about fintechs. And there have been fintechs which in the last few years, be it Zerodha, be it Grow, be it ET Money, etc., they've been really disruptive.
Yeah.
I mean, the number of new folios, the number of first-time investors that have entered the industry during COVID or just after COVID, even just before, has been phenomenal, right? And these fintechs have identified that for this particular strata of clients, the newer clients, the first-time investors, simple, easy to understand, low-cost index funds work absolutely fine, because what these people are looking to do is to leverage their existing user base and to cross-sell certain funds. Now, if you look at it from a business perspective, the cost of running only passive funds is very low. You're not paying any fancy salaries. You're not investing huge amounts of money in research teams. And now the MF Lite regulations are in the offing. So for viewers who aren't quite up to speed with the MF Lite regulations, it's in the offing. It basically proposes that for firms offering only passive funds, there will be less oversight. There will be less regulation, which actually translates into there being lesser costs. And if your costs are lesser, then the path to profitability should also be much faster. So whether somebody will pick these funds or not, see, it depends. If you're a user of these apps, these funds will most probably be promoted very prominently to the users on the app, okay? And I think as long as the users are picking a large cap index fund, I don't see tracking error data to be a significant barrier, especially when it comes to small ticket investors. So yes, go and invest in these funds if it's more easier, if it's more convenient, if it's more prominent. The important thing for a first-time investor is not so much as which mutual fund to pick, but to get started with the investment process and stay away from some of the fancier or the less liquid ETFs and just stick to a large cap index fund and you would be fine as far as that's concerned.
Okay, we started with asking you about a fund which has a very healthy parent or, backed by a parent which is known for its good quality investments or good quality book. Then we went to fintechs which have been very famous in general in the industry. Now let's talk about AMCs which have a big face, so to say, to support the investments as well, be it Helios Capital, be it Unify, or be it Old Bridge Capital. They're all smaller PMS AIF players, but they do have a known face attached to them. What do you think of these?
Look, firstly, I'll say that many new entrants in the mutual fund space, that's the purpose for this show, but even more to come in the years to follow, right?
Yeah.
And that firstly is great news for existing investors of mutual fund services because, it's almost like a vote of confidence that you're invested in a growing industry and mutual funds sahi hai, right? Also what happens is with more players coming in, existing players, they can't get very complacent. And they will have to continuously strive to provide value to their investors. So there's a double bonanza as far as that's concerned. As far as these names, erstwhile PMSs, smaller PMSs, and them coming into the mutual fund space, look, it only reflects about the positive sentiment of the mutual fund space. There is so much growth to be had. We threw around some numbers earlier saying 140 crore plus population. You've got 4 crore unique mutual fund investors. How do you grow that base, right? And I think what also a lot of these recent AMCs, they've provided a template for saying that if you've got really strong performance, you can be rewarded very handsomely, very quickly. And also, in this digital era with direct plan investing, with access to apps, etc., it's not very costly to scale up. Even for a mutual fund, you don't have to set up umpteen number of physical branches across the country. So I think people can visualize the path to profitability with a lot more clarity. And that's why you'll have probably a line of such people coming in. And as we mentioned before, I think on their existing brand name basis, they certainly will attract capital because there will be that expectation that, you've delivered on the PMS, now you'll deliver with the same sort of processes that you have, and you'll get that into an MF space and make it affordable for a lot of other investors and retail investors to participate in.
Oh, absolutely. I mean, the space is just getting, more and more exciting every day. We also crossed like that 50 lakh crore in terms of AUM, which is a huge jump from where we were just a decade ago. So it's been phenomenal to watch. Kushal, one final question. We've gone through this entire list of funds. I want to know which one personally excites you. Which one do you think that, you would keep an eye out for? And do you think that there are any from this list that you would avoid for now?
Okay, so I'll keep my eye on 3-4 of them primarily. One from a slightly longer term perspective about Jio BlackRock. Okay, simply because I want to see what it is that they're going to do to try and shake up this industry. Because if this industry needs that exponential growth, where is it going to come from? I think Jio BlackRock will have a little part to play as far as that's concerned. We spoke about Bajaj Fina. As I said, they've rewarded investors as far as their stocks are concerned, as far as their FDs are concerned. Can they do the same thing in the mutual fund? And I really think it's a very smart pick of actively managed funds that they've chosen to start their business with. From the PNF space, I think Unify is another one I would keep my eye out for. I mean, they've delivered consistently over the last, many years. And I think it's a very exciting opportunity for retail investors to be able to participate in something for which otherwise they need a 50 lakh ticket to do so. As far as which funds I would personally stay away from, look, I think if there are broking firms or if there are apps which are launching passive funds, and the purpose of that is, at least in the beginning, to primarily cross-sell that to their existing database or their growing database, then that won't be of much interest to me. Yes, of course, if there are active funds in the same space, then we go back to the start of the show and we look at them building out some track record, some good communication. And are they running funds? Are they running the schemes as per the design? I think that is going to be of most interest to me. But yes, I think definitely a lot of funds to start keeping your eye out for in the near future.
Okay, this is an exciting space. So there will be new entrants, there'll be more excitement, and there'll be growth which will keep coming in, right? So that's what you said. It'll keep the older ones on the edge. They will not be complacent, and it'll promote healthy competition as well. Kushal, it's been a pleasure speaking with you. Thank you so much for joining us today with your take on the new fund houses, and most importantly, how can a new investor study all of them? Thanks a lot for joining us today. Okay, with that, we'll take your leave on this edition of MF Corner, but stay tuned for Closing Bell to take you through the last hour of trade.